Next part is Pangli, Part A, Section 1 or Subsection 1. So here the requirement is to calculate the overdraft, okay, expected at the end of January 20X7. So it's an important question because a lot of candidates in examination cannot do it well for these overdraft calculation questions. So before moving on, we need to explain how to get the overdraft. Overdraft is a cash requirement. Okay, if there's not sufficient cash, then you need to have the overdraft. Okay, not sufficient cash, you need to have the overdraft. And how to get the cash situations from the financial information provided. You need to work on account receivables or trade receivables. You need to know the inventory change. Maybe because if there's any cash inflow or outflow you have to consider. You may need to work on the account payables. Okay, and also there are other items. For example, the operating cash flow or the interest that you have to consider as well, because you have to consider whether they have any cash impact. If yes, then you have to list them all in your calculation worksheet. So we work on the account receivables first. Okay, at the start of January, what's the balance of account receivables? At the start of January, the receivable is 408,350. All right, and any cash receipt from the customers. Okay, any cash receipts from the customers? Yes, because the question is saying that the customers would like to enjoy 30 days credit and 60% of them enjoy this credit. The other 40%, they pay 60 days. So for example, in January, it means that some customers from December, okay, will settle their due amount, and don't forget the November, because 40% enjoy 60 days credit. So for those November sales, 40% of them are paid in January, and for December, 60% of them are paid in January. So because we have these two information, then we can work out here is the January, the November is 270,875 times 40% of them are paid in January. So it is November sales. And how about December sales? %60 of them are paid in January. So we receive the cash, which are reducing the account receivable balance. It should be 108,350 for November sales settlement, and from December settlement it should be 180,000. And any new account receivables? Yes. The new account receivable in January, just from all the sales figures. Okay, January sales. Which is 350,000. So you sum them up, you can get the balance for by the end of January. $470,000. Okay. So it's the AR balance, and we move to next is about the inventory. For the inventory, it's a bit easier because it gives you the balance at the start of January, which is 455,000. So the addition of the change in inventory during the January movement will be, the question has already provided you the information, which is 52,250. So the total here right now is 455 plus 52,250, which is 507,250 is the inventory balance by the end of January. Next is about the accounts payable. Payables. For payables, okay, we know that the payable balance at the beginning of January, the start of January, is 186,700, and the settlement of the payables is 70% of opening balance. Okay, it mentioned in the questions 70% is paid by the company in January. They plan to pay, and also the remaining will be moved to the February. And also remember that credit purchase is 250,000. So all this information can help you to get the payable balance by the end of January. The settlement will be how much? It's 70% of the opening balance. It means 130,000 and $690 will be settled, and also the credit purchase in January is 250. So the balance will be 306 and 10. So we got receivables, we got payables, and we got some other more information to work on the expected overdraft. So here we can calculate this final step, to calculate the overdraft. Overdraft at the end of January will be how much? The overdraft at the start of January is 240 and 250. Okay, so you have to work on the overdraft movement. I consider any cash inflow and outflow. Okay, because in the opening you have the you have the overdraft already, so you put the numbers. And do you have any cash receipts? from AR, from account receivable? Yes. Okay. You check what we did. What we did is you get the cash received on these two amounts, which is 108,350 and also $180,000. So these two amounts sum together is 288,350 is the cash receipts from AR, and you also need to pay cash pay for your suppliers or to supplier, cash pay to supplier. It can be found in your payables movement. Here, settlements, okay, 130,690, and also the interest pay on the loan, okay, pay to the bank on the loan, which is given in your question, which is 70,000. And how about operating cash flow? It's outflow. For example, the salary you pay to staff and other similar items or other cash paid for the operations. So altogether, the cash outflow here is 146,500. Okay, you make the summation of all these items, then you get the end of January overdraft balance. Okay, you can get the numbers, which is 299,090 only. So here is your cash forecast for this. I think it's quite challenging questions because you have to work a lot of things in order to get this number. Okay, first of all, I need to explain again. First of all, for this question, okay, the requirement is asking you about the overdraft calculation. But if you don't work on the account receivable movement, if you don't know the inventory movement, if you, for example, even don't know how to work on the accounts payable balance, then you cannot get the overdraft balance by the end of January. So first of all, you have to work on each current asset or working capital items, like account receivables. You know the cash receipts and also the new account receivables in January. Okay, some students may ask why I need to work on, for example, account to work on the balance. Okay, not just focus on the cash, the receipts, because I showed you the details on the workings, how to make your mind clear on the movement. Because in exam, the movement is also one of the key steps to show your knowledge on the questions, and especially on working capital management. So here I showed you there's cash receipts and also some new account receivables to get your final balance. And next is accounts payables, okay, which I showed you the settlement of payables. It means the cash outflow here. Okay, you receive the customers, it means cash inflow. And these two items are found. So the question gives you the question provide the information for the interest paid to bank, also the operating cash outflow. Then you got the ending balance on the overdraft by January. Okay.